about uh, I was facing some technical glitch earlier, but I think we can get started again. So I'll quickly run through the points that I was discussing earlier. Um, so hello, sorry about earlier. I was facing some technical issues, so I had to restart the live again. But yeah, I'll go through the points again. So, one thing is for sure that there has been a lot of panic in the market at this moment. And if you talk about today, so there was a correction of 1.5 percentage, and then the market recovered. So now people are kind of kind of like dicey what to do in terms of whether to invest, whether to not invest, and if this budget is a good budget or not. So it really depends upon which side of the equation you are on and how it impacts you. Precisely, if you are a local contractor in Bihar or even in Andhra Pradesh, then probably this budget is the best thing for you because you are on the right side of it. So, but if you are a stock investor, then this is not a great budget for you. You might be struggling and thinking of whether you should be investing or not. Now, what exactly happened? Let's quickly understand. So, first point is the capital gain taxes, which is the most discussed and thought upon by the investors at this point. Because let's say if you have invested in market 1 lakh rupees and within let's say 12 months you get a return, you make that 1 lakh into 1.5 lakhs, so you get an income of 50,000, a gains of 50,000. Now, this gains of 50,000, if you talk about the old taxation system, then this 50,000 would be taxed at 15 percentage. And let's say if you hold it for more than 1 year, this would be taxed at 10 percentage. But what happened in today's budget is that this short-term capital gain is now changed to 20 percentage, and the long-term capital gain, which means if you hold it for more than 1 year, this will be taxed at 12.5 percentage. So this is the critical point wherein all the traders and short-term investors are struggling upon, because your taxation has directly changed from 15 percentage to 20 percentage. But on the flip side, the reason why this has happened is within the past 1 year, if you look at the Sensex or even the Nifty 50 returns, Sensex has crossed almost 80,000 and is now at its all time high. By introducing or maybe increasing the tax, what the government has done is it has shifted its focus from short term investing to potential long term investors and restricting the entry into equity market. Because if they restrict the new entry, only then the market will stabilize in the long run. But when we talk about the negative sides of it, there is also a positive side, which is the exemption that you used to get of 1 lakh on long term capital gain. This is now 1.25 lakhs. So you don't have to pay any taxation if your profit is up to 1.25 lakhs. But if your portfolio value is less than 10 lakhs, you will certainly see a slight increase in your charges that you pay. But if your portfolio value is more than 10 lakhs, let's say 15 or maybe 20 lakhs, then this increase in taxation will hardly make any difference and you won't see much impact. Then, while we talk about taxes, the next most important and most crucial thing is about the diversification. So, this is something which I have which I talk about a lot in my Instagram videos as well, is that you have to diversify your portfolio at this time, because with the government introducing increase in taxation, Indian stock market is not, in terms of short term investing, is not that lucrative. But when you talk about other asset class, let's say Bitcoin or maybe um, gold, these investments are something which you should focus on. And the next best thing is the international market. There are various international market assets or equities in which you can make investments at the moment at 0% taxes. Just do a normal Google search, type 0% capital gain on stock investment, and you'll get a list of countries or list of stocks in which you can invest to get this capital gain benefit. And there are many, I think there are many companies in India also which also enables you and helps you in investing in international market at minimum fees. So certainly something to look out for. The next important thing is about the banks. Now that the stock market entry is getting restricted with increase in taxation, the next important thing is with the banks. So there would be a investor mindset shift. So in order to avoid short term taxes, what investors are going to do is they are going to look out for the different products by the bank, or maybe even look out for NFT or any other investment avenue in wherein they have to pay minimal taxes. In this case, banks are very, so there is a very strong outlook in terms of banks. So if you talk about which bank you have to look out for, there is um, IDFC Growth Bank. So IDFC First Bank is a growth bank because it has a lot of potential in terms of market. And so at this point, the market capitalization of IDFC Bank is around 60 lakh 65,000, which is like one tenth of HDFC Bank, which is around 1.2 lakh crore. So IDFC Bank is a growth bank which will certainly give you return over the long term, but that is going to be a slow process. So you need to be invested in that kind of stock for at least, I would say, 3 to 4 years to get decent amount of returns. Next, banks which personally I have also invested in. I've also invested in ITFC, but um, the next bank is HDFC. So what happened in HDFC is that if you look at the FII ownership of that particular stock, it has now reached to the highest of 54.8 percentage. This increased happened in June 2024, wherein a significant amount of FII inflow happened in HDFC, and that sort of um, gave away the 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 investment, that sort of made it more lucrative to invest. And yeah, I think IDFC is going to be the next HDFC, but it is going to take a lot more years. I mean, you can say next 5 10 years at least. In this end, I'm not sure about. Honestly, I haven't looked at the financials of that particular stock or bank, but I think in terms of bank, one should only look out for. Um, you can look out for Axis Bank. You can look out for HDFC Bank. You can also look out for IDFC, like I said. Yeah. So that was on in terms of bank. So certainly bank stocks are something that you should look out for in the next, I think, at least next 12 months. Okay, so now moving on to, so we have talked about the capital gain taxes, also about the interest rates. So I think in the next 4 or 5 months, we are going to a see a interest rate cut. So certainly another add-on point or add-on push for you to start your investment in international markets, because US equities are going to be very lucrative with all these changes that are happening at this point. Another thing in terms of investing in stocks and getting returns is about unlisted shares. So I've also talked about this before in one of my videos. I'll highlight it again. Is that one should look out for unlisted stocks. Now, what I mean by unlisted stocks is the companies that are going to launch their IPO but have not not submitted their papers for DRP, or they have not submitted their papers or anything of that sort. So if a company is going for IPO and is still in the process of getting it approved or getting it submitted, these are the companies which you can find in um, unlisted stock portfolio. So at this point, investing in these stocks will certainly give you more returns than the stocks that are listed on the stock market at this point, because every stock that is listed right now is running at a premium, because they are running at, let's say, 50 or 60 times their PB ratio, or 60 or 70 times their PE ratio. So that makes it very expensive to invest at this point, because market is really highly valued. So looking out for these undervalued unlisted stocks, or maybe undervalued IPO, is going to be a good investment point. Even if it attracts a short term or long term capital gain, that's okay, because you are going to get higher return in this. But again, in these stocks, what happens is there is going to be a risk. Now, in unlisted stocks, the risk is going to be in terms of you don't know what their trading quantity is, or you don't know what their um, uh, basically their papers, the financials are not available online. So there is kind of a risk involved. But if the company is good, if the company's financials are good, then uh, like a brand of Swiggy. So Swiggy is going to go for an IPO, and soon it will be available in the um, unlisted investment portfolio market. So certainly a stock in which you can start your investment journey in. So this is another way to start your investment. Minimum amount for investing in unlisted stock, I don't think there is any minimum amount, but again, it varies from stock to stock. So, let's say there was a stock boat. So, we know boat Nirvana. So, that company had a minimum amount of investment of 1000 rupees. But honestly, I haven't seen any like minimum capping of investment, because these are like similar to your normal stock investment that happens on any account like Zerodha or anything. These are the same, just that it is not listed on stock market, and the prices will purely change because of their financials. There's no other way their prices would change. So let's say if their revenue is growing, then their unlisted stock price would also go. Only thing is you won't be able to cross verify it, because the financials are not available like how it is available for the listed stock. The only details you can get about these unlisted stock is through internet, knowing about whether their profit is increasing, whether their profit is decreasing, and so on and so forth. So yeah, no minimum amount for that. Next most important thing that is asked to me is about the defense stock. So, defense stock or defense segment, this segment also fell today after the budget, because there was no increase in outlay for this particular segment. When I talk about this sector, the valuation of defense stock is very high at this point. They are trading somewhere, I think, around 50 to 60 times of their PE ratio. But with the government support and with the market sentiments that has been going around, and the expert opinions that have come out on this, is that these um, these stocks, or this segment, is going to outperform in the long run. So if you are invested for more than like 3 or 4 years, you are certainly going to get good returns on this. But the only critical point in this particular sector is that you so right now, as I said, they are trading at 50 or 60 times their PE ratio. But so They also have good amount of order value, um, but there is a high suspicion whether they are going to fulfill this order or not. So everyone, including the experts, including any analyst or any report that you read, people are talking about how are these company going to execute these contracts because of various reasons. So they do have an order book which is strong, they do have future potentials, but will they be able to execute these orders? That is a big question mark. So in the long run, if you're holding any defense stock, good. But if you want short term returns, if you want quick returns, then certainly defense stock is not something that you should look out for, because at this point it's a big question mark whether they are going to deliver what are they have promised or what they have taken on themselves. There are big companies like Cochin Shipyard, BEML, or Astra Microwave Products. These companies have the strongest order book when you talk about defense stock. So yeah, there are good stocks, but at this point, if I were to invest, I would stay away from defense stock. And let's say after 6 months or so, once their quarterly results come out, you can then decide whether they are able to fulfill those contracts. Then surely you can take a call and go ahead with that. So while we were talking about all of the stock markets and everything, the next important thing is about the standard deduction change. So the standard deduction for a salaried employee, it has changed from 50,000 to 75,000. So that is like the increase. Then there are some tax rate structure for employees which have changed. You can certainly look at that. So if I have to compare the old regime and the new tax system, the new slabs that they introduced, so I think around 15,000 is the amount, 17,500 is the amount, which is the amount of tax saved as compared to the old regime. So certainly, if you are looking for, if I am going to save, if I'm going to save some taxes in the new regime, then yes, the answer is yes. You are going to save 17,500 if you do all the math, compare the old regime to new regime. So yeah, uh, that is that. So some unlisted stocks which can be option. So for this unlisted stock, you need to check different websites where these unlisted stocks get listed. So at this point, we honestly nobody has a list of which unlisted stock is available or not, because it keeps changing. So the moment any stock is listed on stock exchange, that particular stock will go away and it will be listed on normal BSE, NSE, um, BSE, NSE exchange listing. So yeah, uh, there's no list as such. So another important announcement that happened in the budget is that they are going to provide loans up to 10 lakh for any higher education. So this, I think the total amount of provision that they have is about 1.48 crore, which is certainly a good thing if you're planning to um, get your additional more education or any other degrees. This is certainly good help. And another important update was that the FII rules would be simplified. That means later on, if any FII has to invest in the stock markets, the rules would be very lenient, which will help them invest in the stocks of Indian market. So certainly in the next, I think 4 to 6 months, we should see an increase in this FII investment as well. Um, so while covering the budget updates, next last update I think is about the gold and silver. So what happened in the gold and silver market is that this segment has noticed cut, um, a custom duty cut from 15 percentage to 6 percentage. This is probably because they wanted to increase the retail demand, and this and if the retail demand goes up, the prices also will go up. So because of those reasons, the import duties have been reduced from 15 percentage to 6 percentage. So we should see a good sign here as well. So yeah, I think I've mainly covered all the points. If there's any question, do let me know in the comments. I've tried to cover the stock market impact. Other changes are pretty okayish, not something that one should be worried about. So if there's any other question, do let me know in the comments. Which stock would benefit from budget? I think railways are something which are going to see a lot of jump. So certainly you should look out for railway stocks. Broker for investing in US market and crypto market, honestly I don't have any recommendation because I think this is very subjective and it differs person to person. So this is something that you can just do a normal Google search. Try to the main important point that you should look for here is the charges that they are charging when you are trying to invest. So if the charges are decent, just go for it. If there's any other question, let me know in the comments. All right then. I think we are towards the end of the session. Uh, so yeah, thank you so much for joining, and don't forget to diversify your portfolio because at this point it is the most crucial one. And try to do more SIPs, try to do more investment in gold, international markets, and stay away from defense segment for the next I think 4 to 6 months. But do look out for railway stocks, banks, and consumer goods as well. These are the most lucrative one at the moment. Okay, thank you so much for joining.